Good morning, ladies and gentlemen. We got a great week ahead of us, okay? We're going to talk about earnings for the week of May 17th, 2021, naturally. But what we're excited about is this is retail week, baby. And you know why? We have a lot of retail holdings personally. My personal portfolios have quite an exposure to retail, let's say. So a lot of this is pretty exciting to me too because it's an overall general trend as we've seen some from some of the reports. Expecting some pretty good numbers out of these retail companies, even compared to last year, in which we saw incredible demand. Potentially, we could see some even better numbers this year. I'll see what that looks like, but let's go right on into it, okay? Monday before open, we've got Clover. New Purple. Purple, obviously known for mattresses, seat cushions, pillows. They got it all. Luxury brand, very expensive product, but I've heard they make a pretty good product. Business is pretty consistent for them, so nothing crazy there. Lordston, say it like we should. Lordston, Freight Car America. That's right, you would have known that was the thing. Palatine, iBio, Orbital, Marinus, and Hostess. Nothing crazy there for the before open Monday for me. I'm not super excited about any of these in particular. I know a lot of people do like to focus on NIU. It's a pretty interesting company. Hostess, I mean, we love their products. Again, and I mentioned it last time, we saw with Pepsi and Frito-Lay sales. There's been some reports that snacking has been on the rise. That's all I'm saying. First quarter, apparently people are eating a lot of snack foods. I'm not sure if that relates to necessarily salty versus sweet, but Hostess has the sweets, man. You can't beat a nice Hostess product, okay? They make the best. I was about to say something, and I hope it was not. I was going to be blasted for saying the wrong product, but Ding Dongs? That's a Hostess. That's got to be. That's a Hostess. After close Monday, we have Ideanomics. That's an interesting name there. I like what you're doing there, but I don't like what you're doing. TME, Flagstone, X1, Remark Holdings, Danimer Scientific, Arcimoto, AGTC. What the heck's that? Canog? I don't know. And Adamus. Really not familiar with most of these companies in the after hours window on Monday. So I'll do some deep dives. Obviously this time. These are typically companies that I have not seen on the most anticipated list. So we'll see what they have to offer. I know Remark Holdings and AGTC, but other than that, not really much going on there. Tuesday's when I get excited. Okay. I get hyped for this because we have some big companies reporting. Walmart. Starting with Walmart, the focus stocks of this week are all retail. Okay, I'm showing you all of them. Expected an EPS line of $1.21 compared to a year ago $1.18. I think they'll beat. Just gonna throw that one out there. I think $1.21 is a little bit rude. I think there's better potential there. And from a revenue standpoint, I think this is a little bit egregious. I can't lie to you. Expected $132 billion, which is a decrease of 0.5%. In no world do I see Walmart decreasing. There are many reasons why I believe that. So, one major thing you need to consider is going to be availability. Availability in Q1 of last year was incredibly limited. Incredibly limited. You're talking about the March surge. People were buying up everything. I mean, they were buying the whole kit and caboodle. You couldn't buy anything in the stores. All the shelves were empty. Now, if you go to a current Walmart now, I will say there are some downsides to it, and the majority of that being because of a recent restructure. They are just kind of a crap fest. They've gotten rid of a lot of their management at store level. And it's pretty rough. Oh, new Klondike cones on the right side got me pretty excited. Sorry, oh, it looks pretty good. I could use some sweets right about now. Hostess got me excited. But the main story I'm trying to put here is availability is so much better this year. Part of the issue again too is products aren't necessarily being stocked. Again, I mention that because terrible change, and I have a good feeling some upper level executive changes will be made shortly from Walmart based off of the results. But I still think they beat year over year because demand stayed pretty consistent, and product availability's gone up. So I think they'll beat on a revenue standpoint, and show a little bit of a comp increase, probably less than 1%. But I know from personal experience, we're up a decent bit. So, for the full year, expected to be down 2%. Would not be all that bad, all things considered, compared to last year. I mean, that'd be an incredible year for them still, because last year they increased by a significant margin. But, yeah. Then we have Home Depot right after them, okay? Home Depot, before I preface this, or I will preface this with the fact that home improvement retailers have seen incredible demand as of late. We've seen a lot of analysts tipping some incredible results expected. So apparently, according to these metrics, home improvement sector is riding high yet again. Peak potential back in the picture. Okay, people are improving their homes by in incredible rates. People are all about home improvement. Home sales still going incredibly, but people are preparing their homes for the market. They're improving the home, not only because they spend more time in the home, because they have more time on their hands potentially now, but expect some really good stuff out of home improvement is what a lot of analysts are saying, and I kind of feel the same way. If you've been into a Home Depot, Lowe's, you know there's been some incredible demand, and again, you compare that. Obviously, price of lumber, pretty expensive. There is somewhat of a shortage. We can't lie. There's a shortage of lumber. But pricing point makes it better for them in terms of margin. But also, the demand's heavy. I mean, the demand is heavy. People are improving everything of their houses, from cabinets, appliances, all of the like. And you're going to Home Depot and Lowe's for that. So I expect some good numbers out of them, no doubt. Let's take a look at what Home Depot's expected. $3.03 in EPS compared to $2.08 of a year ago. That's an incredible growth there. And I think it's 100% feasible to hit that number. I think that's a pretty decent estimate, all things considered. Around the $3 mark should be pretty fair. Now, from a sales point, this is quite significant. Expected to grow 25.7%, $34.6 billion. That's quite a high growth line for a home improvement company making this many billions of dollars, right? Quite a high growth line. Is it feasible? 100% feasible. Is it likely? I don't know what to say. Based off some of the reports I've seen, I think seeing a growth of this stature is possible. But we're talking, again, about a $7 billion growth year over year. Would be pretty significant, but I do think it's possible. I think it'll be darn close. I think it's a fair estimate. I mean, I could see them definitely beating it, but I think it's a pretty fair estimate. After them, we have Baidu, company a lot of people like to follow as well. China's Google, fun stuff. I see him. Macy's, not a whole lot I like to say about Macy's. Again, we talk about retail, but Macy's is one of the ones that, unfortunately, it's a dying company. They were saved somewhat, I will say that. They've been helped quite a bit by just incredible retail demand, but overall, Macy's, it's not going to be a long-term contender for too much longer, unfortunately. I hate to say it, but they're just not keeping up on the online presence, and that's hurting them quite a bit. Then we have IQIY. A lot of people, obviously this was a hype stock for a while, and since they've been doing pretty dismal numbers, frankly. We're talking about not growing subscribers in the midst of pandemic. They're not growing subscribers in the streaming service. They're just not really doing great numbers, and operating loss has continued to stay the same and get worse even. So not an earnings I really look at anymore, because the company's just, it's not worth looking at. It really isn't. They haven't done anything to impress me. Huya. Dago New Energy, NetEase, and Stealth. Oh, yeah. After close, we have Take-Two Interactive. Obviously, I've talked about it before, and we've seen from earnings with Activision Blizzard that gaming is at an all-time high right now. People are buying the heck out of video games, and Take-Two should be putting some good numbers up. Expect some pretty good growth. I mean, we're talking about every year or every month they've been posting better and better results in the video game segment. So keep that in mind. Trip.com, not a company I'm super familiar with, but obviously I know what they do. Going to be facing some very weak comps year over year, so see what they're able to do. Agilicis, the Container Store. It's one I've heard of, but I've never actually been inside one, so not too sure what it looks like in there. QuickLogic, Steris, Transcat, and Ibex. Okay. Wednesday before open, we have JD.com, major e-commerce play in China. Yeah, I mean, I'd expect some good numbers just in general. E-commerce doing good stuff. Target, I did want to take a look at because I love looking at Target, right? I have a decent holding in Target. They're expected an EPS line of $2.15 compared to 59 cents of a year ago. 100% feasible because this quarter was heavily impacted by a month of pandemic in which they had an incredible increase in spend. So keep that in mind. So they should hit that line, no doubt. But overall, for the full year, they are expected to decline EPS. I don't see that being the case. From a revenue standpoint, expected to $21.48 billion to grow 12.8%. That's pretty significant. For the full year, they're expected to decline 1.3%, though, which is I don't necessarily buy. I think for Target, they will stay flat, if not grow by low single digits. But for the quarter, I think this is certainly a possibility here. Again, I talk about availability. It's much harder for Walmart to grow by high percentages, obviously, because they're talking about $130 billion in this quarter, while Target's talking about $20 billion. So the percentage-wise, that's really where you get the difference here. Is the difference of $2.5 billion? I think they're more than able to keep it up, and I frankly think it's just because of product availability. Target will be doing those numbers, and I think they'll hit this line here. So expect some good stuff. Then Lowe's, another focus stock, another home improvement. They're expected $2.59 of EPS compared to $1.77. Should be better. Again, we see improvement year over year in EPS lines easily because less expenses at play. So good to see that. And expected growth of 29%, $23.6 billion expected. I think it's 100% feasible again. I really do. But for the full year, expected to decline 1.1%. I don't see that happening. This company will grow on the full year, no doubt about it. The only issue that could see potentially taking place is the lumber shortage, so we'll see what that looks like. But for the quarter, I think they're going to hit those estimates. I feel pretty confident in them to grow by $5 billion this quarter. We have Analog Devices, chip maker. Again, we have chip short. I mean, everything's a shortage right now, I swear. But Analog Devices is a super consistent company that really does decent numbers. I'm pretty impressed with them. TJX Corporations, nothing crazy to say about them. Consistent retailer. They do good business. ZIM, Eagle Materials, and Endava. After close, we have Cisco, another one I have decent holdings in. It's a consistent company. We're going to talk about here. It's going to be about data servers. I mean, yeah, Cisco. We talk about data right now. Companies transform quite a bit. Data centers are the key, though. You know, that's what it is. That's what people will be focusing on. L Brands, clothing retailer, the first really of this earnings season to report. And as mentioned, as you should mention, this is going to be incredibly easy comps this year for all clothing retailers. Incredibly easy. Because clothing is a segment that declined 40+% as a whole last year. At the peak, for several months, we saw 40+% declines in clothing sales. So this year, it's going to be an incredible comp. People are going to be buying more clothing. I do think we'll still be purchasing more online, so you got to consider that. The companies that have a better online presence have a better shot. But L Brands, easy comps this year, so for sure. The stock's been in the doldrums lately, though. Keysight Technologies, Starbulk, Synopsys, SQM, ZTO, company that frankly I don't read it. Unfortunately, I wish I could. I can't read it. I wish. Copart and America Air Sports. Thursday before open, we have Canadian Solar. Kohl's is one I wanted to focus on. That's right, you know I did. Because I talk about clothing retailers, we see just what kind of an increase we're expected. A year ago, negative $3.20 in EPS, right? Crazy stuff. But this year expected a 3-cent EPS line. No shot, ladies and gents. They'll beat on that EPS line. There's no doubt about it in my mind. Profitability is coming back and demand is there. Okay, demand's there. And expected sales growth of 59.6%, 3.47 billion expected. Easily going to hit that. Easily going to. What shocks me though is the full year only expected 19.2 billion, or 19.2% increase, 17.9 billion. They're gonna beat that line. They're gonna be easily over 18.5 billion this year. That's just kind of how it is. I hate to tell you the truth, but they're gonna beat that full year estimate, no doubt. I mean, they'll be up over 24% probably, and that's even being a little generous there. Just saying. Lightspeed, Petco, pet retailers. That's right. I saw a statistic somewhere that. Sorry, I thought I saw a little spider. I didn't. He wasn't there. The peripherals lie to you sometimes. I can see you out of my peripheral right now. That's right. I'm good. I may be blind as a bat, but the peripherals are in there, buddy. But that, I forget what the number was. 11 million new households that have pets. 11 million. I think it was that. It was something like that. It was over 10 million new households that have new pets, and that's just not necessarily just one. Those could be multiple pet households now. So you think about the benefit for pet companies like that, because pet supplies not cheap. I know we all know this. Dogs are expensive. I love dogs, but they're expensive. I love them. So Petco sees a benefit because of that. They really do. New pandemic pets, just like pandemic babies. You know, it's a thing. People wanted to take care of something. I don't know. Weird stuff. Personally, if I were in a tough financial time, I wouldn't be like, I want to go have a baby or I want to get a pet. But there's a reason why 50% of Americans don't have a dollar to their name. That's all I'm telling you. BJ's, wholesale, expect good numbers out of them. Retail has been doing good, but wholesale has been doing even better than retail as of late. Crazy stuff. In the last year, retail or wholesale has been just out of control. Polo Ralph Lauren, we get with clothing again. Easy comps, ADS. You know what I'm saying? Boys, ADS. Gamers. Yeah, that was cool of me. I know it was. Stands for Aim Down Sights, ladies and gentlemen. Hormel Foods, they make some gross products, but people buy a lot of it. There's no doubt. Triumph Group Incorporated. Sorry, I told you blind as a bat. That was pretty small there. The Children's Place, clothing retailer. Boom, easy comps. After Close Applied Materials, AMAT, decent company, decent stock, very consistent. Chip shortage, we'll see what it looks like for them. Maxion, Palo Alto, Palo Alto's a very just textbook Silicon Valley company. Do some great numbers, they always do. Deckers Brands and Ross, again, clothing retailers. You're going to be seeing some easy comps. You better hit them. Silvercorp, Apollo Investment, that's right. Flowers Foods, that doesn't sound good. Sounds not enjoyable personally. Yeah. Hawkins, Enersys, it literally looks like they stole the Energizer logo. Am I right? Let me just, ladies and gentlemen, don't click wrong. Don't mind the stroke there real quick. What did I click on? I didn't mean to click on. Look, the thing about it is the strokes are happening. Am I going crazy here? I can't type right now, ladies and gentlemen. I mean, am I wrong? I mean, look at that. Then look at that. And look at that in the bottom right there. Ladies and gentlemen, there's going to be some copyright infringement here. I mean, this is ridiculous. I'll file it for them. Good grief. Friday before open at John Deere. Are people buying a lot of farming equipment? I don't know. That's one industry I'm not sure on, but I could see it happening, right? We talk about home improvement. People do some gardening. Do they need John Deere equipment for it? Don't know, but they might need a mower. That's for sure. Foot Locker, easy comps. VF, oh yeah. Booz Allen Hamilton, right? Sounds like an insurance company. Law firm, we'll see. Buckle, easy comps. Again, and RBC. That's what I got for you this week. I hope you enjoy it. We got a great time. We got a great time ahead of us this week. I'm excited. Hope you have a great day.